The oil market completed the year of 2022 in suspense, awaiting further auctions from Russia in response to the ban of oil exports to the countries that supported the Russian oil price cap. Market participants are betting on exciting developments ahead. The green agenda for the European Union did not come to expectations. Donald Trump was right with his predictions. Indeed, the leaders of developed European economies admitted that their well-being and economic progress rested entirely on the exports of cheap Russian petroleum products. Nowadays, under the Russia-Ukraine geopolitical conflict, the US pushes the European Union into introducing anti-Russian sanctions. The European Union authorities have already issued a ban on Russian oil and gas supplies and imposed price caps. Such a boycott has backfired on the European countries. Meanwhile, the energy consumption has been shrinking around the world because the global manufacturing activity is losing momentum. The bottom line of massive QE programs is that major central banks turned on their printing presses to pump economies with humongous cash. As a result, inflation settled at the highest rates in the last 42 years. In response, central banks had to combat sky-high consumer prices by raising interest rates at a rapid pace. In turn, tight financial conditions set the stage for a recession in the global economy, which is to blame for a decline in energy consumption. The market is alarmed by the COVID resurgence in China, which overshadows global economic growth. In December, to calm down nationwide protests, Beijing decided to partly relax some restrictions and the official zero-COVID tolerance policy. Today, similar protests are flaring up across Europe. More than 50,000 citizens are venting their discontent in the streets of Amsterdam. Under such turmoil in the oil market, the benchmark oil grades are trading with a higher volatility. Nevertheless, the oil market opened the new year with a bullish trend. Brent crude topped the resistance level at $85.50 a barrel. So, market participants are revising their sentiment. Today, the ruble cannot have support from Russian traders because financial markets in Russia are closed for the bank holiday, and the dollar-ruble pair is consolidating at around 70, finding support from the bullish trend in the oil market. And the currency pair is likely to hover at around this level, awaiting comments from Brussels and Moscow. A further trend will depend on the Kremlin's retaliation to the Russian oil and gas price cap. Gold traders are also expressing positive sentiment. There are rumors that major central banks are buying up gold at a record pace since 1967. Oddly, the technical chart does not reveal that extremely large market players are setting the tone now. If there is some truth in the rumors, long positions are being opened by small volumes without sharp price fluctuations. The People's Bank of China and the Bank of Russia are buying the biggest volumes as they aim to diversify their gold and forex reserves and pursue their anti-dollar policies. At the moment, we see that the gold price has approached $1,825, the upper border of the previous trading range. If the price settles above it, gold will reinforce its bullish trend. And that's all for now. We wish you profitable deals. See our channel with a new video in a couple of hours.